Hello, this is Cynthia Fick, and this is the December 12th stock market update. We've got a lot to cover, so I'm going to go straight to the charts. So for the months of August, September, and October, we said it looked like the market was taking its normal 2 steps forward, half step back, a little bit of a pullback, and that was to be expected because it's gone pretty far, pretty fast since last October. It turned in a little bit more of a correction than we expected, down 10%, but we saw it, find its bottom at the end of October, and the market has rallied. You may say, why is the market rallying? We were kind of predicting that it was going to hold there and the market was going to rally because inflation, the market seems to believe, is kind of dead or dying, that the Federal Reserve is done raising interest rates. Interest rates, which had spiked, are now coming down. So the market really likes it. CNN Business said that key U.S. inflation gauge fell last month by the most since 2020. And then CNBC said UK inflation falls by more than expected in October to 4.6%, the lowest in 2 years. So in general, inflation is coming down. It looks like the Federal Reserve is probably done raising interest rates. Most economists think now we're going to have a soft landing, which is what we've been saying this whole year. And that's what the market is going off of now. You may say, well, maybe we have a bigger economic issue hanging out there. I don't believe that inflation is dead. I believe we're going to have a bad recession. Well, let's look at what the financial conditions are actually showing. This is put out by the Chicago Fed National Financial Conditions. It's an index, and it just shows you going back to the 1970s till now. And this is an index, a gauge that shows you the higher it is, the worse the economy is at the time. So in the 1970s, we had inflation. You see, we're up near 5 on the index. In the 1980s, we're around 3 or 4. Stayed pretty good and solid until the financial crisis 2008 happened. And then this, believe it or not, is 2020. So that was, the COVID correction, and we're nowhere near being above, the zero line on this index right now. So that's what it is right now. It could change, but that's what we're looking at right now. So financial conditions are pretty solid. Looking at the market, this is 2023, been kind of an interesting year. I mean, that is a nice move to the upside with a lot of pullbacks, and this one became a correction. We held these moving averages that we needed to hold, kind of bounce from there, and here we are breaking out into new highs. I always say that's a big deal. When you come to the old high and break out past that, that's when the market can really start to move, because you washed out a lot of the sellers. Also last week, the U.S. labor market was still robust with nearly 200,000 jobs created in November. So why is the stock market doing well? It's showing us it wants to do well. And then there's all these other things that are kind of backing that up. Next, we have our long-term trend. I'm always talking about long-term secular bear markets and long-term secular bull markets. Well, here it's going back to, the 90s. And this is what a long-term secular bear market looks like. Basically, there's no movement. You put in $100,000 in the S&P 500, and you didn't have $100,000 again until close to 2014. That's what it looks like when you're just in a secular bear, long-term bear market. Well, this is what it looks like when you're in a long-term secular bull market. The general trend is up. Not every, you're going to have a 10% correction every year or two. And then we've had some pretty big, corrections, the COVID crash and 2022. But we never broke the trend. That's the 200-month moving average, like we did back in the bearish categories. So again, there's going to be a lot of volatility. What I can guarantee you is that we're going to have a lot of ups and downs, but the general trend is up. And it's so important to be in the best sectors. That's what we do. Not everything did well this year. Most of you did. There were 7 stocks that did really well, and a lot of you have those stocks. The market is starting to broaden out, and that is a really, really good thing. That means this can be sustained. There's all these stocks that haven't done well all year. They're raising their hands. They want to go to the first of the class. So that's kind of things we're watching for. And I hope you have a great week, and we'll see you next week. Bye.